In this video, I'll be talking about financial statement analysis of accounts receivable. We've talked about financial statement analysis in several different contexts, and we know now that the purpose of financial statement analysis is to interpret the information we find in the financial statements. We do that by computing ratios that look at the relationship between different financial statement amounts. When we compute a ratio, we know that we will need to interpret it by comparing it to something. So that might be a prior period, it might be an industry average, it might be a specific competitor. We're going to calculate accounts receivable turnover, which is a liquidity ratio that helps assess the quality and liquidity of accounts receivable. We know that liquidity refers to how easily you can convert something to cash. So if you are collecting your accounts receivable more quickly, they're going to be considered to be more liquid. The accounts receivable turnover measures how often, on average, accounts receivable is collected during a period. It shows how well the company is doing at granting credit to customers and managing their accounts. The accounts receivable turnover is computed by comparing net sales to average accounts receivable common net. We've looked at comparing income statement items to balance sheet items in the past, and we know that when you compare an income statement item, which is a period of time concept, to a balance sheet item like accounts receivable common net, which is a period of time measure, you need to compute the average of the balance sheet amount. We'll be computing this measure for Walgreens for the year 2022. The sales number can be found on the income statement. Net sales refers to sales revenue less sales discounts and sales returns and allowances. Walgreens has labeled this amount simply sales. The amount for 2022 is $132,703. So this will be the numerator in our calculation. We also have a partial balance sheet where we can pick up the accounts receivable, net amounts for 2022 and 2023 that we will use to calculate average accounts receivable, net. Accounts receivable, net refers to accounts receivable net of the allowance for doubtful accounts. To calculate the average accounts receivable net for this ratio, add the ending accounts receivable net, which is the amount reported for 2022, to the beginning accounts receivable net, which is the amount reported for the prior period or 2021. So we're going to add those two numbers together, we're going to divide by 2, and that's going to give us average accounts receivable net. Walgreens' average accounts receivable net is 5017 plus 5663 divided by 2, or 5340, and then we can calculate the accounts receivable turnover by saying 132,307, our sales number, divided by the 5340 average accounts receivable to get 24.9. So an accounts receivable turnover of 24.9 is pretty high, especially when you compare it to CVS's accounts receivable turnover of 8.8 times. So this tells us that the quality and liquidity of Walgreens receivables is much higher than that of CVS's. CVS may be granting credit to customers it should not.